Hey guys, welcome to episode 11 of my Robinhood Portfolio. And right now, this is an on live portfolio video that I am doing. And right now, as you can see, the portfolio is up $103. We're going to talk about it all, guys. We're going to talk about what the market has been doing, how the market has been faring this week, and what are my changes for this video compared to the last video. But we're just going to talk about this week in general. This week was one of the worst weeks I've had in a while. Actually, the whole market in general has been down. There have been a lot of trading tensions with as far as the tariffs and the Fed decision rate hikes. But again, if you have a long-term outlook, if you have a long-term mindset, you keep buying up these dips. A lot of stocks, guys, a lot of stocks were on sale this week. If you bought the dips, you're golden. Just buy these dips up and just hold it out. And you want to be in good companies. You want to be in good companies like the stocks that I'm holding. Like I was looking at Walmart, they're still on a great discount. You look at stocks like Starbucks, which is now a new addition to my portfolio. We're going to talk about Starbucks and what they've been going through. But again, when the stocks go down and you see an opportunity, when the stock goes down 10%, I like to buy stocks when they are on sale. It makes no sense to buy a stock when the price is all jacked up. And, Warren Buffett says himself, you have to be greedy when others are fearful. When others are fearful and they're getting out, that's when you buy in. That's when you buy into these high market cap stocks like Starbucks, Walmart, and the Targets of the world. But this is a live shot of my portfolio, what my portfolio does throughout the day. I try not to look at it. I just try to leave it alone. I've made mistakes. I've made plenty of mistakes. I got into options. I made money. I've lost money. I've sold low. I've done it all, guys. I'm still learning. I'm no by means perfect. But again, this week in general, the trading fears are very real. They're very real, guys, and the market's not going to go straight up. It's not going to go straight up. I've seen it myself in plenty of occasions where I've held through many corrections, like, for example, the last correction, which happened on January 31st, and it lasted through February 8th. That was a terrible correction. I think all the stocks dropped about 10%. But again, buy these dips, guys. That's how you get ahead. So we're going to talk about my portfolio. What have I been doing? Even though it's been a bad week, right now, the market is seemingly bullish for today. Today is Friday, and the market is bullish. But we're just going to quickly talk about what I have been moving around and what I have gotten rid of. So for the most part, my portfolio still looks to be intact. There's been some slight changes here and there, but for the most part, there's been some there's been minor movements. There's been minor movements in this portfolio. So since there hasn't really been a lot of movement in this portfolio, I just want to talk about what I actually did, what I actually did move. So let's talk about Verizon for a second here. I had AT&T, and AT&T. If you look at the news, if you've been doing your due diligence, they acquired Time Warner. But the acquisition of Time Warner and having so much debt that they have to pay off, it really kind of just moved investors the wrong way, and the stock fell a lot more than what was expected. A lot of people were expecting that once they acquired Time Warner, that the stock was going to go up. Well, maybe when they acquired Time Warner, I felt like a lot of people felt like the price was already factored in from that acquisition, and that's the reason why the spike up didn't happen. But again, I think that AT&T is still a good stock. The reason why I sold AT&T, which is what I want to talk about, is because I wanted to try to move some money around. I like moving money around and trying to get on these dips, but Starbucks was on a great dip. I think I sold off Caterpillar. Caterpillar is no longer in my portfolio. I did take a loss with Caterpillar, but again, sometimes you take losses, and you move the money somewhere else because you have a you had the other stock was on sale. Starbucks was down 10%. Caterpillar may have been down like 4 or 5%. And like I said, if I see a sale that's down 10%, I really like to jump on those bargains. But Verizon, at just the right time. The stock got upgraded, I think, by I don't know which bank upgraded them. I think was it Morgan. I don't know if it was Goldman Sachs or Morgan Stanley. It was one of them. It was one of those upgrade analysis that the stock received an upgrade from a neutral buy, and that affects a lot of stocks. When these stocks get upgraded, when these analysis, they say, oh, the stock is neutral, or the stock is not a buy, the stock is a sell. A lot of people buy into it. So again, it's all about due diligence. It's all about buying at the right time. I bought Verizon because it still factors into my portfolio as far as getting a weekly payout. And like I said, this portfolio will pay me weekly, guys. The whole portfolio is going to pay me weekly, and I think those dividends are going to start stacking up. And this is the reason why I didn't sell. I didn't sell because I'm sitting on some great dividend stocks. I'm sitting on some great dividend stocks, and when the market goes down, I'm still generating income from these dividend-paying stocks. Verizon and AT&T have the same payout date. They have the same payout dates. They have the same, for the most part, I think the same ex-dividend dates. And Verizon has a little bit more growth to them than AT&T. They don't have as much debt that they have to pay than AT&T. And excuse me, but I look at Verizon. They're a solid company. They're a solid company, guys. I mean, let's look at the stats. It's a market cap of $200 billion, a PE ratio 6%, dividend yield is 4%, and the volume is 4 million. So the stock always has great value, but again, I think that Verizon is a good grower. They're a much better grower, in my opinion, than AT&T. I do believe that AT&T pays a better dividend, but when you're sitting on close to a 5% dividend anyway, I think that this was the right call here. This is definitely the right call, because when I ended up trading the stock received an upgrade that very morning, and the stock has been up ever since. So I think I'm just going to keep adding on to my Verizon shares. I don't have them as a provider, but I still like them as being one of the top two telecom stocks in the entire market. It's not even close. So like AT&T and Verizon are the top two telecom stocks that pay a great dividend. And right now I am sitting on, I think, about $26 for a $26 return, this stock is a little bit more of a grower than AT&T. I like the move. I like this move. I think this was a really solid pick, getting into Verizon and moving that equity over to Verizon. Let's talk about Starbucks. Starbucks. These are new stocks that are in my portfolio. I bought into them around the average cost $52.34. I think the stock may have been down 8% when I bought into it, and the stock kept going down. But this is what happened, guys. This is what happens. But you're thinking that you're going to hit the bottom. We don't know where the bottom is. We don't know where the support level is with these stocks. When you buy into them, you say, "Oh, okay, I'm buying on a discount," but the stock can keep going down. It can keep going down, and it did. Look, my average cost $52.34. Starbucks right now is sitting on a $51.45 discount, but the point is that they are still a company that I like. They're a company that I like. I looked at Caterpillar and I said, these tariffs, they're not going to go anywhere. I think these tariffs are going to last for a while. So why not buy a Starbucks? I like these little companies that they're everywhere. They're on every corner. Every time you turn a corner, you'll see a McDonald's, you'll see a Starbucks, you'll see a Walmart. That's why I like these companies. I like these companies that just sits on the corner every time you turn, and they're always in your face. They're always in your face. Target. They're there. They're everywhere, and you use them. You use them, and right now Starbucks is sitting on a $69 billion market cap, which isn't too terrible, but I think that is one of I like the stock. I do. I think the sell-off was a little bit over-exaggerated. It was a little bit over-exaggerated. I've seen people on chat forums, they were saying that, hey, this stock can go down to $43, and I think that's a little excessive. I think it. I mean, I'm not saying it won't happen. It could very well happen. It could very well happen. But for that to happen, the stock would have to drop almost 20%. And I just don't see this stock from an analysis point of view, from all the technicals that I've seen, was going to drop 20% in 3 days. I just don't see it. So yeah, I like Starbucks. You look at what they do. Everybody's buying coffee. Everybody's being in the shops. I understand it. I get it. They've been in the news. There's a lot of reasons why Starbucks dipped 10%, 13%. There's a lot of reasons. This sell-off is what I've been waiting on. I've been waiting to put Starbucks into my portfolio and getting into a discount with them around even $52, $50. I think they're still, it takes nothing to make coffee. It takes nothing to make coffee, and people are spending $5, $10 on a cup of coffee. And, it amazes me how their PE ratio is as high as it is, because, it's easy. It's easy to make coffee. It's easy to pour coffee in a cup and buy it, and, sell it for $5 to $10. So they know how to make money. They know how to make money. And, let's look at the reasons why the stock dipped. I think there's a lot of reasons. I think there's a lot of factors. Their last couple of earnings reports have not been solid. Their last couple of earnings have actually disappointed a lot of investors. The stock, in general, right now, is sitting on a 12%. It's on sale 12%. This is not a growth. Right now, I wouldn't figure Starbucks to be a grower. But again, they're everywhere. They're on every corner. And I like that. I like how these companies are just everywhere. They're all in your face. And, they can sell their product cheaply. Not cheaply, but, they make a cup of coffee. I can make a cup of coffee at home and, I'm done. But, then I go into a Starbucks and I have to pay $5 for it. So, just look at stuff like that. Look at stuff like that. They've been in, Starbucks has been in the news both for negative reasons, both financially and politically. They've been in the news, and, a lot of people saying, hey, there's a lot of politics going on. They're closing down stores. They're closing down 150 stores. But again, most people are. I think a lot of people are focusing too much on the negative here. They're focusing too much on the negative, and I wouldn't even consider the closing of 150 stores to be that bleak. Like I just feel as if that. They build stores. On every corner I just run into I run into a Starbucks, and when they say that they're closing these stores down, it could very well mean that these stores weren't profitable as more than other stores in these other markets or districts. So you want to relocate. You want to relocate your stores. You want to put stores where they have a chance to succeed. You don't want to put a store in an environment where they're not going to sell. They're not going to sell their coffees or anything else like that. But they closed down the stores. A lot of people didn't like that. But then look at what they're doing. They raised their dividend. They raised the dividend. The dividend went up, I think, to 36 cents. And this is what I like. This is what I like, guys. I like when companies do this. When they start increasing their dividend. When they start buying back shares. When they start. Companies only do this, realistically speaking, if they're making money. If they're making money, if they're being profitable, they will increase that dividend, and that's what Starbucks is doing. So again, you just have to do your own research. You have to just look at things a certain way, approach things a certain way, and say to yourself, okay, what can Starbucks, what can a stock like this do for my portfolio? What can a stock like this do for increasing my dividend for the long term, for being a grower? I still believe Starbucks is a grower. I think Starbucks is going to grow. I think this can easily reach $100 in the next few years. It's not unrealistic. It's not. I'm just saying it isn't. And so, I added some more Cisco shares. I do like Cisco a lot. Everybody's using routers. Everybody has a cell phone. Everybody needs, to be on modems and all this and routers. And, it just makes sense. I increased my Cisco shares. So my average cost now is $43. I'm still down on them, but again, they pay a great dividend, and they actually have an ex-dividend date coming up It's a stock that I like. It's my only tech stock. And we talk about the FANG stocks. We talk about Amazon. We talk about Netflix. These stocks are growers, and Facebook. They're hitting all-time highs. But again, the research, guys. Do the research. Ask yourself this. Am I gonna buy a stock like Amazon when it's like at its all-time high? And we don't know when the market's gonna crash again. The Dow Jones has had an 8-day losing streak, up until this point, up until Friday, up until today, where I'm up $92. But again, these high growing tech stocks, they're good. They're good if you can hold on to them for a long term. They're growers, but you're buying right into the high, and what goes up must come down. What goes up must come down, guys. So again, just be careful. If you want to, I'm looking at my portfolio right now. I think I'm very well diversified. There's a little bit more things I can do with this portfolio, like adding some more tech stocks, because I do like the tech industry. I like the tech industry more than any other sector in the whole market. Out of all the market sectors, technology is my favorite. So if we look at my portfolio, I know just recently I was up around $11,493. The portfolio is starting to trend back here, but this is a live shot at what I see during when I check on my portfolio and see how well my portfolio is doing. I know I've been down a little bit thanks to the market being down and thanks to the trading tensions, but again, I have a long-term outlook, guys. I got a long-term outlook. I like these moves. I do. I like a Starbucks in my portfolio, and then I like a McDonald's in my portfolio. I think those are two stocks that they go hand in hand. They go hand in hand. A lot of people buy those McDonald's coffees. A lot of people buy those Starbucks frappuccinos and all this other stuff. So, I like it. I like this portfolio a lot. I like what Coca-Cola's doing. As far as paying that dividend is really safe. They've been paying that dividend for the last 50 years, as far back as I can remember. You look at a stock like Johnson & Johnson, up 1% today. 1% today, and I've been holding at a great average cost around $120, a great support level around $120. So this was a good buy. I like Johnson & Johnson a lot. They're very diversified in the healthcare industry. But we don't stop there. I look at a stock like Pfizer, and even though I bought it high, the stock is on a trend up. This is if you look at the graph right here, the 5-year graph, this is a trending up graph. It's a trending up graph, and they pay an excellent dividend of about 3%. So solid market cap, solid dividend growth. This is what this portfolio likes. This is what I like to see when in a portfolio like this. Look at stock like NRZ. I'm taking a little bit of a hit with NRZ, but that's fine. They've actually been trending up lately. But this is one of those stocks that I feel like Wall Street may have just missed this somehow. I don't know why. Maybe it's because they pay a very high dividend yield, which is around 11%. And there's a lot of questions on whether this dividend yield is sustainable. It's sustainable. Is it gonna keep paying me 50 cents every payout date? I don't know. That's the thing. I don't know. This is the risk. This is probably one of my riskiest stock in the portfolio, NRZ. But they have an ex-dividend date coming up. They pay a great dividend of 50 cents. I'm going to get $12 back from my shares. I like it. I like the stock. I like these little real estate investment trusts. It just diversifies my portfolio even more. So yeah, guys, I'm going ahead and cut the video here. This may have been a short video. I don't know what the time will look like, but this is my portfolio. You guys see it. You guys see what I'm trying to do. I'm trying to get clever. Clorox. Even though I have 5 shares of Clorox, I know I bought them kind of high. I'm just going to add more. I'm going to add more to my Clorox shares because people aren't going to stop using bleach. People aren't going to stop using bleach. It's very popular. The used bleach while people are cleaning up. It just makes sense. I have a lot of consumer durables, consumer goods in this portfolio, and it's all about diversification and getting paid for doing as little as possible. That is what I'm all about, doing as little as possible. if the market does trend back, I have a safety blanket because everything in my portfolio pays a dividend. And maybe in the future I would like to add a Netflix or Amazon, jump back into Amazon or something like that. I'm just gonna pull up Amazon here, and even though I don't own the stock currently, I have been in and out of Amazon. I've been in and out of them, and I've shown it before that I have been in and out of them. Look at that. Look at all the history. Sell, buy, sell, buy. So I've been all over this stock as far as selling and buying. I wish I would have just held her there at $954. But yeah, I've been in and out of Amazon, and I love Amazon too. Amazon might be a little bit overpriced right now. Well, not even a little bit. This stock is overpriced, but you look at what they're doing. They're just into everything. They're everywhere. They sell health. They're getting into the healthcare. They're getting into the healthcare. They're the best e-commerce stock by far. It's not even close as far as what these other e-commerce stocks are trying to do. I know Shopify has been trending up. I know that a lot of people like eBay. But there's just nothing that can compare to an Amazon. Amazon is trying to run a complete monopoly on everything, guys, on everything. So that's what you want. That's what you want. You want something like that in your portfolio, and I might buy a few shares of Amazon on a nice pullback. I think right now the stock is really high. On a nice pullback, if it could pull back to around $1,400, I can see maybe going into the stock. But yeah, I'm gonna go on ahead and I'm gonna cut the video here. I'm just showing my portfolio. I'm just showing an in live progress of my portfolio, what my portfolio does throughout the day. And again, comment. You guys can comment, like, share, whatever you want to do. But yeah, this is my portfolio, and I'll see you guys next time.